I love real estate, but there's a painful truth to this business. Are you ready to hear it? Most real estate investors fail. Let me say that again. Most real estate investors fail. Carrot.com estimates this at 87% of real estate investors fail. Bigger Pockets estimates this at 95% of real estate investors fail. And we're not talking about just losing money on a house. We're talking about stopped investing, wiped out, walked away. 87%, 95%. That means unless you get this right, you could fail. Plain and simple. We're here to change that. Top 3 reasons why investors fail according to Bigger Pockets: too much risk, not enough education, not enough analysis. We're here to rewrite that game. And from our perspective, it comes down to this: exit strategy. The decision to renovate is not an on-off question. There's a whole spectrum of choices. And what should guide those choices? One thing and one thing alone: profitability. Your real estate agent can't teach you this. Your contractor has never learned it. And your lender doesn't have the tools, unless, of course, you're working with one of our clients. The bottom line is, you're the one who needs to learn this. During the last downturn, I was COO of an investment firm and led the acquisition of over $1 billion worth of real estate and mortgages. Our success was driven by our ability to be nimble and to make asset-level decisions based on each property's unique market and features and economics. For some properties, carpet paint and lipstick was the best strategy. For other properties, we wanted to do a full reno to maximize the upside. We needed to be smart, fast, and accurate, and that's what drove our profitability. Some say you make money on the buy in real estate, and that's true, but only if you know how to maximize it. RicherValues helps you analyze an as-is strategy side by side with 3 levels of ARV: minimum, partial, and full. And really together with a 4th that we call value add ARV, if you're looking to add square footage, beds, or baths to your property. On 300 properties recently analyzed by investors on RicherValues, a full renovation was only the most profitable strategy on 32% of the deals, which means on 68% of the deals, there was a better exit strategy. Which means if you're not looking at all of those exit strategies on every deal today, then you're either walking away from a deal that would have made you money, or you're falling into the trap of overspending or underspending and hurting the money that you're taking home. Or worse, you're stepping into potential losses. Running this analysis is going to add immediate dollars to your take-home profits. On those 300 properties, RicherValues uncovered an average of $19,000 per property. When you factor in carry costs and time frames, that number easily surpasses $30,000. So even if your acquisition pull-through rate is only 5 to 10% of the assets that you look at are the ones that you buy, that means that you're still making $1,500 to $3,000 for every property you analyze on RicherValues. With our retail pricing of $15 to $30, that means your ROI is 100 to 200x. It's easy to use, easy to learn, and will change the game on how you evaluate your deals. Come try it for 90 days. Give yourself some time to nab some wins. The money you spend with us will be paid back 100-fold, and RicherValues will become a staple for your business for years to come. If you want to beat the odds and avoid falling into that 95% statistic, you need to focus on profitability. You need to be opportunistic on every asset. You need a framework. You need RicherValues. Come sign up today. Email us at info@richervalues.com or go to our website and click demo to learn more. We look forward to speaking with you. We look forward to having you on board, and we look forward to helping you with your business. Thank you so much.